What is going on, everyone? This is now episode 3 of the Strong CEOs podcast, and this is the second time we were bringing on a guest. We have Sam Lefarra. If you want to introduce yourself to everyone, he's very known on TikTok, and he's building his own company as well. If you want to talk about that as well and your background and everything.
Yeah, of course. Well, first off, thank you for having me. My name is Sam Lefarra, also known as Melfarra. I have a background in finance and political science from Cal State Fullerton. I've been trading in the stock market for nearly 6 years now, both fundamental and technical analysis, and nearly 4 years in the crypto market. I also started my own company called Value. We're a financial technology literacy company trying to help people attain financial literacy, and a lot more to come soon.
So that's awesome. So, like, what are you doing right now, like, in the early stages of your company? Are you guys just trying to drive traction for people to sign up, or, like, do you guys have any, like, what's on the pipeline right now for you guys?
Yeah, so right now we're thinking of creating a kind of crypto hedge fund where people could essentially invest either on a mobile app or a desktop version. This would be a great way for us to attain, capital and also put that capital to good use, help people attain that generational wealth in the crypto space through staking, wrapping, mining, farming, you name it, all of that good stuff, because cryptocurrencies right now and just blockchain technology in general is such a good opportunity for a lot of people to attain that long-term wealth. And I'm hoping Value essentially becomes that, and we continue to grow there. Our main thing, too, is to try to become a trading platform as well, kind of like Webull or Robinhood. That's something we also envision doing in the next, hopefully, year.
Oh, cool. And that's kind of like a lot of people don't know about staking and farming. I know that I'm relatively new to that aspect of the crypto market. So you're kind of like that guy on TikTok, kind of on live all the time talking about mining and staking and all that good stuff with crypto, right?
Yeah, absolutely. I go live like a lot every single day, so
Yeah,
I'm always
I've seen it.
interactive. Yeah, I appreciate it. I try to tell people about staking, wrapping, farming, mining, you name it, yield farming, best DeFi protocols, because there's so many different subsectors in the crypto space that really a lot of people should know of, such as DeFi or yield farming, store of value cryptos, X, Y, and Z, you name it. So the crypto market, again, is very diverse and lucrative with the amount of gains that you can make on it.
Yeah. So
Yeah, dude.
for a lot of our viewers that don't know about farming, what is farming? First off.
Yes, farming essentially is, again, if you have like a DeFi protocol, like for example Compound, you essentially can take a loan out of a specific crypto, use that loan to then invest into another crypto. Therefore, you're kind of yield farming. You really want to look at things at how the interest rates are playing within a specific decentralized finance protocol. But when I say farming, it comes in different ways. There's yield farming and then there's farming. And when I say farming in quotes, I usually mean like it's a more environmentally sustainable way of mining. As I'm sure many people know what crypto mining is, that's usually on a proof of work protocol like Bitcoin, where you're using like massive hardware energy to solve a blockchain that validates that network. Farming is essentially doing the exact same thing, but it's more environmentally friendly. And there are other protocols out there like the Chia protocol, where it's proof of space and time, where it's a lot less energy to be used, a lot less hardware. Therefore, it's more environmentally sustainable. So that's why it goes under the form of farming rather than mining in that. Yeah.
Good to
Yeah,
know.
dude. I always see your TikTok lives, and every once in a while you'll be like, guys, if you put $1,200 like in this like like you have an Excel sheet, like I want you to talk about that for a little bit, because you have like a list of like 10 or 12 different crypto projects, and you're like, if you invest like with these percent allocations of these crypto projects, if you stake them and then hold them for like the next 10 years or by 2030, that $1,200 could be potentially worth over $1 million based on my price target. So how did you like come about that, like,
Yeah.
and find these different projects with these different staking programs? Because I know there's a lot of people that are watching this that know how to invest in crypto, but like don't know how to find these like opportunities and the research that you do behind it. So where did you discover that and like that opportunity for everyone?
Yeah, so first off, staking, for anybody who doesn't know, again, there's a proof of work protocol, which is like what Bitcoin and currently Ethereum is doing. But there's also a proof of stake. A proof of stake protocol is another way of validating the blockchain or validating the network. And that's usually when you, depending on how many tokens you have, let's say we're looking at Matic, Polygon. Let's say you have 10 tokens of Matic. Instead of doing a proof of work protocol, you have proof of stake. So you take those 10 tokens, you would put it in a vault, and that vault goes through a specific validator, and that validator takes your crypto, takes your coins to validate the blockchain. And that's what blockchain usually is. It's about validation, about uniqueness. That's what really makes it so great, and how the technology is just so good, and how there's so much money to be made because you're rewarded for doing that. That's how the tokenomics of things come into play and stuff like that. So that's essentially what staking is, and that's why people who have crypto in a specific proof of stake coin should be doing that staking, stuff, for lack of a better term. But yeah, I mean, if you were literally to invest $1,200 across multiple different digital assets such as Mana, XRP, XLM, Bitcoin, Ethereum, and you were able to stake the right ones the right way, just over the long term, just as if you were reinvesting your dividends in like a stock, you could essentially turn that into over $1 million in 10 years, especially with how the price of crypto has been moving, how they have a better store of value than the metals market, how it's, in my opinion, a better hedge to inflation than any other asset out there. I truly do think crypto is going to rise in general. Yeah.
That's awesome. I mean, so like for instance, I hold a decent amount of Ethereum, and I'm just debating whether or not I should just continue to hold my Ethereum because I have no intention on selling it for the next 5 to 10 years, and I'm probably gonna, like, again, not sell it. So I was debating whether or not to get it off a cold storage wallet, like a Ledger Nano X, or if I should stake it. I know Coinbase just came out with their staking program and stuff like that, so I was wondering what you think I should do for that. If I should stake it, or
Yeah, well, I think we have another guest on the show right now from the background.
Josh's kids.
Yeah, Josh, you can mute your mic if you're not talking.
I think he muted himself.
Josh's fault.
He did
Oh, he
mute
did.
himself. Dude, I feel for you, bro. Don't even worry. Don't sweat it.
That's all good. We got to start somewhere, right? Got to start young too. But with Ethereum right now, again, dollar cost averaging is always the best thing to do. Right now, I personally am a fan of Ethereum 2.0. What they're currently doing is going from a proof of work protocol to a proof of stake, because again, proof of stake is more sustainable, environmentally friendly, things like that. And you can stake your crypto for like 5 to 6% on Coinbase. So as Ethereum continues to rise, you're making an extra 5 to 6% in rewards. And that's just money that you can compound. Think of it as like a savings account. The regular savings account, you're getting like 0.5% to 1% on a good one, especially with how interest rates are so low. And the crypto, not even. In the crypto space right now, you're talking about 5 to 6%. And that's just with staking. And there are some cryptos out there that are still not new, but they're relatively new, where you could attain like 50, 60, even 110% year over year just in interest, which is, again, that's the whole generational wealth stuff. So much money to be made in that industry in the long term.
So I actually have...
So how do we know if that's... Oh.
Go ahead,
Right,
John.
you can go
No,
first, Alex.
Okay. Well, I actually have two questions. Well, one, I kind of did my own research on Ethereum 2.0. So I've heard, I don't know if it's true or not, but I've read that if you stake your Ethereum 2.0, it's locked up for like an entire year, and you can't like get rid of it at all. So wouldn't you miss out on all the gains if you wanted to sell it? You couldn't. Is that correct?
That's correct, yeah. And the reason being is because right now the lockup periods to go from Ethereum to Ethereum 2.0, because they need to completely change their tokenomics.
Right.
That's just risk for the company, for Ethereum essentially, or the project. But again, the chances of Ethereum not moving to Ethereum 2.0 and then completely scrapping that is very, very minimal to none. And honestly, for people who are invested in crypto right now, you don't want to try to trade it so much as invest in it.
Correct.
You really want to just compound your money, dollar cost average. And the goal is to get your assets to a point where they are so big that you can essentially start taking pieces of it to like pay for rent, invest in other things, stuff like that. You look at what happened in the 1930s with the stock market, the 1950s with the real estate market, the 1980s with the commodities market, and the early 2000s with the tech market. What they all attained and what all happened during those spans was known as a generational wealth transfer, where even if I invested like $100 in any of those periods, it would have turned into a massive amount of money over 10, 15, 20 years. So much money to where I could use it to pay for a mortgage or pay for a business or pay for anything and still have enough money to send my kids to college, X, Y, and Z, you name it. That's the whole point of what's going on with crypto and blockchain right now, and why I would be against, unless you're leverage trading, that's a different story.
Right.
You should be a very little amount of money if you're doing that, because it can get really risky.
Yeah.
But that's essentially the goal, especially with this opportunity right now. It's a good time to be in it.
Yeah, it's so
I have a
new
question,
and
though.
everything. Go ahead,
Yeah.
Caleb.
Oh, no, you go first, because I think you're the
No, I was
follow-up
just
anyway.
going to say that if you do want to stake it, you better really believe in the project because your money will essentially be locked up for that time. So if you're
Yeah.
a long-term investor in Ethereum, you better be prepared to have that money locked up. Of course, it'll make you 6% or whatever. What is it, 5 or 6%
Yeah, 5 to 6. It
every
changes
year? Yeah,
on how many people are staking. The more people that stake, the lower the interest goes.
right. I gotcha. Cool. Let's go ahead,
All right,
Caleb.
so I
Sorry
had a question for you in that sense around the staking yields. So I was looking into USDT and USDC staking as of recently. And for me, obviously, what you're saying earlier, it's like, the savings account where you get like 0.1% of Bank America and they just rob you blind, versus like now in staking crypto where you actually get your rewards for loaning out your money. And there's various platforms varying from 4.5% upwards to 10% for just holding USDC, which is like incredibly stable, backed by Coinbase and never going under for the next like few decades. So in your opinion, is it better, especially during the bear market, when hypothetically, if we're entering a bear market, which could be happening, is it more safe right now to stake USDC and every month kind of the input money in at like, let's say $500 every month, you put that in, that's what is it, $50 for every $500 every year compounded, and then use that as a savings account, which theoretically, if that rate holds, which it probably won't, but it will hold to a certain extent,
Right.
it's higher than that of the stock market's average returns, and do that for 5-10 years, or even 3-4, and then put that money back into assets once the market is like running again. Would you recommend doing that, or you recommend holding these altcoins through the bear market?
Right. So that's a great question. With USDC and USDT, again, Tether, they have some issues in terms of their auditing, in terms of the US dollar. So there is a little sketchiness there. But with USDC and even DAO, which is another stable coin, that's more so with diversity. Like, you don't want to have too much money in assets that are going to be extremely volatile, and you're staking it and you're making extra interest on it. And again, it depends on the cryptos that you're invested into. Like USDC, you're making about, I think it's like 2-3%, might be a little higher now.
It varies. I mean, Coinbase is offering 4.5%, and I found a few websites offering upwards of 10%.
Yeah, Voyager's 9%.
Celsius is
For
8.5%,
USDC.
and then for international, it's 11.2% for USDC, which is crazy.
Yeah. And I mean, those are all like great numbers. But keep in mind too, USDC is a stable coin. So it's always going to stay at 1, which is why those interest rates, and again, the risk to it is very, very low. No matter how much money you put into it, more than likely you're going to get those returns over time. But with other coins like Matic or Ethereum or even Akash Network, PancakeSwap, you're looking at 100 to 110%. And I would never recommend selling too much of your crypto during a bear market. If anything, you should be doing the opposite, really trying to accumulate as much crypto as you can, because again, it's about compounding your interest over the years. And right now, even now, as we're in a little bit of a bear market, it's all just due to cyclicals. Like right now, Bitcoin kind of got to that 4th stage of the rainbow chart that I kind of always look at during my live, which is basically a monthly chart using a logarithmic scale. Bitcoin topped out at around 65,000, and right now we're kind of falling down to what I believe will be possibly 20,000, maybe even 15,000 worst case scenario. But again, that's just a green light to buy up as much crypto as you can during that time. Because again, cryptos are cyclical. So you don't want to sell too much during a bear market, because that's a great time to start accumulating. You usually want to do the opposite. And as for earning interest, that's if you're holding cash. During a bear market in the stock market, yes, you want to hold cash. But when it comes to the crypto market, things in my opinion are a little bit different. You want to be very aggressive in terms of staking, especially if you believe in that crypto platform. Because the price target of a lot of these coins are very, very high over the next 10 to 15 years because, again, the risk is still there. But given how they've grown so much in the past 10 years and how major institutions such as Coinbase, federal governments, major institutional banks are getting into the crypto and blockchain space, the failure, it's almost getting too big to fail. And I know usually when people say that, they tend to fail. But in terms of the blockchain and crypto space right now, it's just a little bit different in terms of it being more so like what happened in the 1930s, 50s, 80s, in the 2000s with the tech market. And that's currently what's happening now. So I would hold out your altcoins through a bear market, if not accumulate more. Usually you want to sell most of your altcoins or take profits off the top during the height or near the height of a bull market. And with cryptos, it's actually very easy to predict that. Again, you just have to look at Bitcoin, see how that's doing. And once Bitcoin starts to fall, the alt run starts to happen. And then usually the altcoins follow. And then X, Y, and Z, everything else follows after that.
Right. I have a follow-up for that, actually. So when considering, so you're obviously against holding USDC during a bear market. You'd rather be holding altcoins just because of returns. Which altcoins do you pick, and how is that process done? Because there's clearly a lot of coins from 2017 that aren't here today, and there clearly will be a lot of coins that are even in the top 10 right now, definitely top 50, that won't be there in the next bull run.
Right. So how I pick that is simple. I just look at history. And the history with blockchain and cryptocurrency is still extremely small. So it's not so much a shot in the dart, it's more so calculated risk. So what I look at is I look at cryptos that have already been around for at least 5 to 7 years, if not 10 years. Look at cryptos like Cake, Akash even, XRP, XLM, Matic. Those cryptos have been here for a while now. And the likelihood of them being here for the next 10 years again is higher than most other cryptos. So just from looking at that, it gives me a more positive mindset that these cryptos are going to continue to succeed. Not only that, but I look at the interest rates that they provide in terms of their staking. For example, Cake. I like Cake a lot, a solid platform. It is the only crypto right now that is really taking on the micro cap exchange industry. You hear about all these meme coins and all these poop coins and shit coins that are going on right now. They all go through PancakeSwap. They all wouldn't exist if it wasn't for Pancake. And right now, I do believe PancakeSwap will continue to rise as they improve their technology even more. Again, they have 110% with their staking rewards. And you can also stake your Pancake and to convert it into another crypto, which makes it even more unique. So that's why I pick Pancake, because the technology, the tokenomics, it's all solid. Not bulletproof, but it's close to it. As for other coins such as Akash, that really goes down to the technology behind it and the industry that is trying to disrupt. Akash right now, AKT, is currently trying to disrupt the cloud services industry. Right now, you look at Amazon with their AWS service, or even Snowflake, or even Google with their, I believe it's Google Firebase. The node creation within those industries and with those services are like a 10th or 10 times more expensive and more insufficient in comparison to what Akash does. Akash does it in a more affordable, sustainable, and efficient way than all three of them using decentralized, decentralized technology to then acquire that. And right now, Akash is trading at only like $4, and the market cap is like 300 million. So you look at the expansion it has in the entire service or the web services industry. A lot of room for growth.
Yeah.
If we get to a $10 billion market cap, you're talking from $4 to about like nearly $80, $90, and right now it's trading at about $4. So I like Akash, and also you could stake it for about 50-60% year over year, and of course you're making even more money as it rises. So that's kind of how I pick the coins. I look at the history, I look at the tokenomics model, and I look at what they are doing that's so unique. So uniqueness, history, and tokenomics.
Gotcha.
Let me ask you a question on the staking part of it. How do you actually stake then? What platform do you use to do it on, and where do you do it?
So it all depends on the crypto. A lot of crypto companies that are very, very solid, they have a guideline of how to stake. So for example, Akash, you would stake it on Kepler. So Kepler is a service that allows you to put your coins in a vault, and therefore the vault has validators. You pick your validator. Usually you want to pick a validator that is legit, so you're not getting scammed, because there are scammy validators out there. So you want to be careful with that. But you would pick the proper validator. You would put your money into Akash. You would transfer it from either Bitmart or Gate.io or whatever exchange allows you to do so. Once it's transferred, it's as easy as just clicking a button. You delegate your coins. It says, here are the risks, which are very little. And then it says like, okay, your coins are going to be locked up for X amount of time. But of course, it will tell you how many rewards you're making every single day, like, 5, 10 Akash every single day or whatever. And then, of course, it just reinvest it, you delegate it, reinvest it again so that you're making even more. Because the more tokens you have, the more chances of you getting even more Akash back, if that makes sense. Like if I have 10 tokens at 50%, I'm making 5. But if I have 20 tokens, I'm making 10. If I have 40, I'm making 20. So it just compounds from there.
Exactly. It's the same with a savings account or anything like that. The more money you have in it, the more money you're going to get on return. So
or dividends, kind of. You could relate it to that too.
Correct. That too. Yep.
But yeah, I saw a couple of videos like on TikToks with staking and all that. You can make $1 million doing that, staking your tokens, depending on what it is, of course, and like you were saying, depending on the tokenomics and history and all that.
Right.
Yeah, the only one I saw that I've actually even looked at, to be honest with you, is I think it was Pancake Swap. Can't you stake your Pancake Swap, pair it up with BNB into their liquidity pool?
Yeah, I mentioned that a little bit. That's what makes Pancake so unique, is that, and other cryptos do that. You could stake your Pancake so that it converts into either Binance or even other altcoins, which is pretty cool to do. So depending on how much Pancake you have, instead of getting 10% on or 100% on Pancake, you're getting 80% on Binance, or you're getting 70% on, DAO or whatever it may be.
So Sam, if you had to choose of 3 coins right now to stake, what's your top 3?
My top 3, definitely Pancake. That's a coin that I love. Pancake Swap, Matic, M-A-T-I-C. I think Polygon, their technology is solid. I see Polygon getting to maybe 80 cents, so that's going to be a solid buy as Bitcoin gets to 20,000. Hopefully, again, you always want a dollar cost average just in case. But Pancake, Matic, and then I would have to say either Polkadot or Akash. Polkadot is really good for 14-15% year over year. And Polkadot is most likely going to continue to succeed as they move a lot in correlation with Chainlink, which is also another crypto that I don't have in my portfolio, but it's a crypto that I'm definitely looking into.
You got to add it.
Yeah, it's one of my favorites.
Yeah, I've heard nothing but good
solution.
Yeah, but the reason why I picked Polkadot over Chainlink is because I'm all about that passive income. And Polkadot does 15% in comparison to Chainlink, which does little to nothing. In terms of staking. So, yeah. For those 3, Pancake, Akash, or Polkadot, and then for sure,
Sweet.
Well, I really hope people that are watching this do some research on staking after this video, because I'm definitely going to be doing that. It's just one of those things, it's a learning curve, I feel for everyone. You know about you know of it, but you don't know how to do it, and then you're just I'll look into it another day or whatever, and then you just don't do it. But it seems very important. My only concern is just how do you determine whether or not some of these staking programs are sustainable? Look at ExxonMobil, for instance, back in the March lows in the pandemic. They couldn't hold their, what was it, a 6.5 dividend yield. Because some of these cryptos that you're saying, it's 100%, Pancake Swap's 110%. What if BNB faces an SEC lawsuit after the XRP SEC lawsuit is done, and then meme coins and all of them are just gone, and then that obviously correlates to some disruption for Pancake Swap, and they just can't hold up their staking program, and you're staked and you're locked into that liquidity. What happens? I'm just nervous about just putting my money away into a project unless its name was Ethereum, or if Bitcoin had a staking program, coins like that. I'm just nervous, I guess.
Yeah. No, and definitely, again, because the industry is so new, even relatively speaking, and the technology is still there. So what's different about ExxonMobil and their situation is that was tied up to actual liquidity and cash that they had, and them becoming a more failing business throughout those years as the price of oil fell. Although right now the price of oil is near $80, which is crazy to think. But the reason why something like that wouldn't happen in terms of Binance, even if they did face an SEC lawsuit, is because the rates are not determined by Binance. That's the whole point of decentralization. The rates are determined by how their tokenomics model is set up. So depending on how many people are staking, the rates fluctuate by the market. So let's say there's 100% of people that are staking. The rates are going to fluctuate really lower because they want to disincentivize people into staking. They want more people to either sell their crypto or do something like that. That's the whole concept of decentralization. It's letting the market, the free market, do its thing. So that's why even if Binance faced a massive lawsuit and they were thinking of completely liquidating, which would never happen, knock on wood,
Yes.
it wouldn't change the rates that much. And even if it did change the rates, you are still earning, some money on interest. It's like having your money in a savings account. But as for the XRP's lawsuit, that's going to set the tone and the precedent for major lawsuits in the entire blockchain and cryptocurrency space. If that lawsuit does go well for XRP, which I hope it does, because what Ripple did with creating their digitization of XRP, which is a cryptocurrency backed by the company Ripple, the SEC is looking into whether Ripple had malintent into creating a digital asset in order to either raise funds and trade it as a security rather than a commodity. So that's what the whole issue with the SEC is going on right now. If the lawsuit goes well and they basically say, okay, XRP, you guys are a private company, you're allowed to do this, the crypto industry is going to go nuts. Like everything, even right now, it's a lot of confidence is already in it. I can tell you with the optimism that I have with this lawsuit, assuming that it does go well, XRP is going to rise possibly to maybe even $10 over the next 3 to 5 years if that lawsuit does go well. And every crypto that you can think of will also follow in its footsteps. But as for the staking, again, it does not determine by outside factors. It's all determined by the tokenomics. So depending on how many people are staking, the more people that stake, the interest rates fall. The less people that stake, the interest rates rise. So it's all dependent on how the tokenomics is determined. It's not dependent by, one person like on ExxonMobil. They said, okay, you know what? Some CEO saying we don't want to do 6% dividend because we can't do it. It's completely different. This is all power to the people, decentralization, all in the tokenomics.
So the staking thing, essentially, is that going up right now because we're seeing, quote unquote, like what you were saying, kind of like a bear market going on? So people are getting out of crypto, and then these companies are essentially enticing people to get back into it by giving a good APR or whatnot on the staking. And what you're saying is get into it now, get those gains while you can, while they're high, right? They're really high, and then kind of scale out as we see the market kind of climb back up.
Right. So whether there's a correlation between staking percentages and the price is still something that I have to do a little bit more research into. But obviously, as more people are selling, there are less people that hold that coin. Therefore, there are less people that have access to stake. Yes, that may cause the rates to rise. Again, there's no like one central person that's like, oh, okay, now that people are selling, let's try to incentivize them to stake. Incentivization comes from just how the tokenomics model is already created beforehand. Again, it's not one person that says, okay, let's raise the rate, let's reduce the rates. It just happens. It's how the market is determined. As less people are staking, obviously less people who are holding, less people are going to be staking, therefore the rates will rise. And that's why during a bear market, you do want to take advantage of that. You want to take advantage of high interest because it may not be that high for a very long time. I hope it does stay that well, or it kind of fluctuates in that area. Because again, as those prices rise, it's not like you lose coins. No, you can still stake it. You can still earn interest. And right now, really take advantage of that. And it's super easy to stake. You just got to know where to send your coins and what the proper validator is, and then just how to delegate it. So you're reinvesting it. It's as easy as one.
Yeah, and I think that's what viewers need to know too, is if they can, do some Google search and find exactly what they have that they can stake, that they've been, hodling for the past 2 months because they're down 50% on it, and they're see in red right now. But I think this is a great way for them to get some of those losses back as we wait for the coins to go back up.
Right. Yeah, I mean, there's a lot of people who are invested in cryptos who don't have their assets first off in a wallet. They keep it on an exchange, which is not good. Unless you're staking it, of course, on that exchange. There are some that offer that. But of course, if you're in the massive red, you want to be staking because that just incentivizes you to hold even more. And you're making even more crypto. Like, you will make that money back if you believe in the project long term. Obviously, if you're invested in like a meme coin, I think there are very little meme coins that allow you to stake anyways. You're probably in dire luck. But like a Safe Moon or Shiba. I'm not a big fan of those two. Whether they go to zero or not, honestly, they probably will continue to rise over the years. But there are way better cryptos to be invested in that will actually give you, more passive income.
Yeah.
Yeah. But yeah, we were just talking about the like pancake swap and everything, and I don't know if you guys saw, but my boy Lucas, blockchain boy, he didn't he like move like the pancake swap like APY like market a little bit. He posted a TikTok about it, like showing how you can stake, basically how he makes a lot of money off of just staking his money into pancake swap. It was like a 30-40 second video, and it got 10,000 likes, 200,000, whatever it was. And then after that he posted another video, and he was basically saying like, yeah, like I kind of screwed myself from posting that, because instead of 110% I'm making a year, now it's about 100%. Like I literally moved the staking market, but obviously it's different now. But I just thought that was funny, and how you were talking about when there's more demand, there's less APY that everyone's bringing in. So I saw it firsthand on TikTok, which is crazy.
Yeah, that was definitely. I remember watching that video as well. Usually when the staking rates do fall as well, the price of Pancake will usually rise, assuming that they move in correlation. But I mean, 100% is still pretty nice. So
yeah, that's still pretty good.
Yeah.
But yeah, so like we're talking about pancake swap right now, and it kind of correlates a little bit to the meme crypto market, because you have to use pancake swap to buy most of these coins on the BSC. But I just wanted to touch a little bit about that Faze Clan rug pull. Did you guys read up on that, or did you see that video? There was a guy on YouTube.
Oh yeah.
His name was something Zilla. I forget his name on YouTube, but he basically went like 100% full mode Sherlock Holmes, investigated the entire thing. It's a 37-minute video. We can actually pin the video up here after this. Like as you're watching it, you can click on it and watch it. But
Yeah,
it's honestly
CoffeeZilla.
crazy. What is it?
CoffeeZilla.
Yeah, CoffeeZilla. He spent so much time making this video, so you guys got to watch it. He basically exposes all of Faze Clan and their intentions behind the entire project, and they basically found their wallets as well while he was doing the investigation, because they just tweeted these meme coins essentially that they were getting paid for, promoting giveaways or whatever if you follow these accounts or whatever. And then they gifted, like really stupid, they gifted the winners on Twitter, showing them like their wallets were exposed like in the tweets. So he went on the BSC scanner and saw that all of these coins that they were getting into, they were just dumping as soon as they launched. And especially the Save the Kids token that just happened last week. It was literally a planned rug pull.
Yeah,
like it was
crazy.
absurd.
I don't think it was last week. It was last month. It was the first week in June, if I remember correctly, because I remember I was in California when that happened. Because Nelk tweeted about it. Nelk was like, if you are promoting these coins and dumping them, you're like a horrible person, or whatever they said. I can't remember, but I remember that week.
Yeah, I mean, I heard about what they did, which again goes into the whole meme space. Like a lot of people have to be careful with what they're investing in, and a lot of the videos that they do watch, make sure to do your research. If the tokenomics is like a quadrillion in supply of tokens, probably not a good idea to be invested in that crypto. You need to know who's backing it as well. But what Faze Jarvis and all of those other individuals and what they did, that was definitely very terrible, especially if it was planned. I really hope they think long and hard about what they just did, because that really screws over a lot of people who think that they can get rich off of this. Because crypto is not a get-rich-quick scheme. It really is like actual investing into technology of the future. And people really need to have that longevity in this space.
I think it was planned too. What they did was, because they had a code, an anti-whale code, they couldn't dump it. What was it, like they couldn't dump within a day or something, and then the code was changed like the last minute right before it went live. They changed the code from 1 day to like 1 minute or something, and then all these creators and influencers just dumped at the same time. So it was definitely planned. Something was fishy about it.
It was 100% planned. And the worst part about this entire thing is Faze Clan, Faze Kay, Jarvis, you said. There's a few other guys that are involved. I think Rice Gum was involved, Aiden Ross. Like all these big influencers that have huge platforms on social media, whether it's YouTube, Twitch, their company, Faze, they're making like a disgusting amount of money. Like in the last 4 or 5 years, they've just been accumulating. They're living in like nice houses. They have nice cars. They're making a lot of money. And the fact that they would do this, and they, on the YouTube video of CoffeeZilla, they basically were able to see how much coins they got, and all of these different dumps that they got into, they were given coins. They weren't given BNB or anything, which is just stupid if you're running a project, because then it's like you're asking them to sell. But it's the reason why these project people do that is because they don't have to take any money out of their pocket to pay these influencers. They just pay them these coins that are essentially worth nothing unless there's a good marketing team behind it and they get a lot of buyers. But like on average, they were making $30,000 from these pump and dumps. These big people that are making hundreds and hundreds of thousands of dollars on just ad revenue, $1 million deals with sponsors and other different partnerships they're getting. Like the fact that they're just doing this to make like $30,000, risking their credibility, their platform, like everything that they have. Like Faze Kay has been in Faze for how many years now? Like 5-10 years. Like he has a loyal following. Now he's just kicked out. Like now he's no longer a part of Faze because of maybe making $250,000 this year off of these projects. Like I just don't.
Yeah, I understand it a little bit, just because for the simple fact that if you look at all these people that did it, that they're still kids. They're not adults. They're still learning in life, and no matter if they're making $1 million or $5 million a year, they saw quick money, and that's what they wanted. They were like, "Oh God, yeah, let's do this. This is easy. This isn't going to affect us because we're doing this other stuff." They just didn't think about it, and I could see a lot of other people doing this, and this one got exposed big time.
Yeah.
Correct.
What worries me with all this and the
Basically made $23 million off this one.
wait, what?
How much?
23 million, I'm pretty
He
sure.
made 23 million. Are you sure?
Yeah. I mean, I was hearing that yesterday. I'm not sure if that's confirmed or not, but these guys made a shit ton of money off this rug pull.
Oh wow.
Well, they
Like
said,
you're not gonna rug pull and jeopardize like everything, maybe possible jail time, if you're not making at least like $1 million, and they more than that.
Oh.
You have to get kicked out of Faze
They
for
make more.
$50,000.
Yeah, but how could they do that? Though? How could they make kind of much?
Well, the way they make that much money is, again, they launch a token on the Binance Smart Chain, and then they basically, again, a lot of these meme coins, they rise on value just through marketing. The more people that buy these cryptos, those coins rise in value, and obviously, them being the majority shareholders, the market cap rises as well. So they hold like 80% of the tokens. So once they see that these 80% of these tokens are now worth, $23-25 million, they sell all of it, and they're not even trying to be like, schemy about it. They're just straight up. I don't think they know what they're doing. That's the thing. I feel like they think that this is just a get-rich-quick scheme, that nothing is going to come back to haunt them, that nobody's going to get hurt. I don't think they realize how it's as if somebody who IPO'd in a company and owns like 90%, you can't just sell all 90% of your shares. There are lockup periods that the SEC has you regulated doing. A lot of people see that with this crypto space, they don't really have those regulations. And I feel like, young and naive people think that they could take advantage of it, and they don't really realize how the stain that you'll have on your reputation. Even, yes, $23 million is a lot of money. It might be worth it if they can get past this, but again, the reputation is really going to stain them for the time being, because you don't want to be known as a scammer. That's like the worst thing that you could be seen as, especially in the space that they're in. But that's essentially how it works, and there's a lot of crypto dumps out there, and people really got to be careful with that.
yeah, this
Absolutely.
is the one that's just been brought to the news and the mainstream media and all that. This project, I've seen it happen plenty of times before. What worries me now, well, not really worries me, I guess we kind of need regulation in this space, but I don't know, I kind of see regulation happening because of what's been going on with Faze. Just the
Well, then
last couple
also
days.
Mark Cuban with like 3 weeks back got
Yeah.
rug pulled.
Yeah,
Yeah,
I
you got
heard about
rugged,
that
but-
too.
Iron Axe like that.
Yeah, he got
Yeah.
pulled. Yeah, and he was
Stable
calling
coin
for
that was like actually not stable.
yeah, he was calling for regulation.
Yeah.
On Twitter, wasn't he saying that? He's like, I demand regulation.
Yeah, I mean, I can't blame him. I'm really interested to see the outcome of this, because this consistently happens on a regular basis, and this is a lot more consistent than what happened in 2017. So in terms of macroeconomic factors, these consistent rug pulls by big creators, people that are supposed to be trusted, is going to have massive implications, especially in this XRP Supreme Court case. And if that turns out foul, then the entire crypto market is going bare for God knows how long, as institutional investors stay out of it.
Yeah, I don't know
You're right about that.
I don't even know if it can be regulated. That's the thing, because again, with decentralization, anybody from anywhere across the entire world can make a crypto. That's what's the beauty of the technology. But again, with great power comes great responsibility and all of that good stuff. There are just some people out there that can take advantage of this and just do these massive pump and dumps. Because the United States, we're so limited with our guidelines in terms, through the SEC and what we're legally binded to regulate. We can only regulate things within our borders. We can try to regulate what China does, and we can try to regulate what the UK does in terms of creating, pump and dump schemes or whatever. But it's extremely hard to track at times, and it is extremely hard to regulate because of that. If you cut off all of these people in the United States from creating these tokens in the United States, well, there's going to be a lot of people doing it in China. There's going to be a lot of people doing it in Australia. And then you also have concepts of people who actually want to create a crypto that's actually going to be sustainable. It disincentivizes them from creating that. So the whole issue is just extremely new and difficult to really find a solution to it.
Right.
I wouldn't say it's easy as just putting because again, what would the regulation be? That's
I think it's a
essentially
pretty simple solution. I think it's securitization. It's
It would literally
in the
be
same
like-
thing with your stock market where you're giving up part of your equity of your company. You're putting yourself on the line. You're putting your company on the line. You should be able to do that with crypto. Because crypto right now is it's just tokens, it's just commodities. It's just like a theoretical price tag pushed onto a coin. But in the stock market, you can run a DCF and you can see these numbers backing up these companies. That's not the case for crypto right now. Until we get to that point where we can securitize crypto companies like Ethereum, Binance, etc., I don't think we're gonna see an end to these pump and dump schemes.
Right. Yeah, and that's why people just have to be aware of because there's a trade-off, right? The trade-off for having these pump and dumps is that you have massive decentralization. You have massive decentralization and power back to the people, but the people need to be aware that bad decisions are going to lead to you losing money. You can't just YOLO your money into a new coin called meme whatever, Elon's whatever. You have to do your research, make sure that you're doing your DD, and you may get lucky on some of these coins, but again, that's why you want to invest in projects that actually have solid tokenomics behind it. They actually are backed as if they are a real company like Binance or an Ethereum, or even XLM or Ripple that have long-term benefits.
Yeah, I mean, guys, just follow Sam on TikTok. He's gonna tell you which coins are meme coins. He's gonna tell you which coins are actually fluid investments where you can hold your money. There's so many good creators on TikTok or on Twitter, YouTube that you guys can look into and do your own research, and then you can see what their perspectives are on this. But if you see something on your For You page that's this is the next Safe Moon, this is the next Dogecoin or whatever. Just don't even look at it. You have your biggest asset is time, and you use time to make money. So if you're working a 9-to-5 job in the summer, you're spending 40 hours a week to make a maybe $1,500, $2,000 paycheck every 2 weeks. Why would you want to use that money and allocate it towards these projects where the intention is if you're not the market mover of these projects, you're going to get screwed? Or if you're holding the bag last, you're going to lose all your money. There's way much better opportunity, and you can allocate your risk somewhere else where you can see rewards. Obviously not as well as if you were to 100x a meme coin, but that's just you have a very low probability of being able to do that. So I don't know, my message is just to try to get out of this market. And Sam was saying, the best opportunity to invest into these altcoins is during a bear market. We may be approaching that. Bitcoin has just been trading sideways for the last month and a half. Caleb likes to say it's called a crab market. I guess that's what you were telling us in the last episode of the podcast. But just start doing your own due diligence and research on these other altcoin projects where you can put your money in it and they're going to be there in 5 years, because 99.999% of these meme coins are not going to be here. The only ones that I think will be here in the next bull cycle are maybe Safe Moon, Dogecoin, and Shiba Inu, and that's about it, in my opinion. Everything else is going to be gone, and there's going to be
I hope Come Rocket's still here.
the billionaire, the Come Rocket billionaire.
Cummies.
But yeah, Caleb, where do you see the market right now with Bitcoin? I just want to touch on that real quick. Are we going below $30,000 again? Are we retesting that 28.7 range? on Bitcoin, I personally think we're gonna see $20,000 to $24,000 bottom before we go higher, before we even see 40. But what are your thoughts on that right now?
Yeah, we're like a very interesting point in the market right now. I mean, it's kind of a continuation of what I like to call the crab market. In a sense, it's just where you get snipped at the top, snipped at the bottom. It's the market makers making the money. But we are along. You guys remember from, was it mid-May, late May, when everyone's talking about, oh, we're in that like pennant, and if we break above the pennant, we're gonna go like stupid up, and if we break below, we're gonna go like stupid down. So we're on that trend line, the top trend line on the pennant right now. We've been bouncing off that, holding us like very good support. But I was looking at something yesterday. I forgot who brought it up. It was a smaller creator on TikTok, but it looked as though there was like serious manipulation to bring it down right now back to this pennant, in an attempt to make people buy in as they see like as a support. So I think there's a really good chance within the next few days we do break down the support and we head towards like lower than 28.9, which was like the previous low. I think there's a really good chance that happens. But like once we get down to that area, there's so much support. Everyone keeps buying back up, and the consistency that when we get down to that area, we always bounce back up, leads me to believe that we're never really going to get down to 20. I don't think we're ever going to get to the point where we're at 20,000, because like obviously if we're at 20K, every single person in this call is like buying Bitcoin, and if that just tells you anything, it's not going to be just us. It's going to be the whales as well. So I don't see
it's just going to make that price skyrocket.
Yeah.
I mean, just to counter that, like real quick before you move on, that is why you guys have to set limit orders. Because if we do see, if you guys wake up one morning and see Coinbase like Bitcoin 21.5 or whatever the bottom is, if you're watching Bitcoin on CoinMarketCap or on TradingView or whatever, watching the charts, if we see a drop under that 28.7 support, and it's just gonna go down so fast, and it's just gonna get bought back so fast, where there's a 10% chance you're going to be able to get in at any point during that, because there's just so much demand for those orders. So you guys have to use limit orders. You can buy them on Coinbase Pro is where I buy my limit orders for Ethereum and for Bitcoin. But that is something that if you guys want to do any homework this weekend in regards to crypto or investing or anything, learn how to set limit orders and where to do them with your exchange, because it's very important. And you're not going to be able to buy the bottom unless you have, like I have $20,000 limit orders for Bitcoin. I have 22.5, I have 23.6, I have 25,000 already prematurely set. So I don't even have to be on my phone when it happens. I can wake up one morning and I can be like, oh shit, like Bitcoin hit 23,000. Like I just got another $500 worth of Bitcoin. Like, let's go. Like there's just no way you guys are going to be able to get these bottoms unless you set your limit orders.
Absolutely. You got to ladder them too. You got to ladder them.
Yep.
Absolutely. But yeah, so we were talking about crypto for a while. We just wanted to talk about equities for a little bit. Sam, so how long have you been in crypto, and how long have you been in the stock market? And I'm assuming you're more crypto now because of the craziness that's going on. So like, tell us a little bit about that, like your background.
Stock market for nearly 6 years, crypto for nearly 4. So the stock market was my initial love. Still love it, obviously, but crypto and how this is really the chance to attain that generational wealth has really caught my eye, especially with what's going on now in the past year. A really good opportunity still in this crypto space, along with staking your rewards, all of that beautiful stuff. So yeah, that's a little bit more about me. But with the stock market right now, I really think with how inflation fears are so high, I think a lot of that has been priced in from the first and the second quarter, especially with the quad witching that just occurred. We did have a little bit of a dump in the market. It's like the whole entire stock market right now has been very, very frustrating to watch, because we need some sort of a pullback very, very soon, especially if our next CPI index is extremely large. That's going to really scare investors, because I don't think we've fully priced in inflation. At least it may seem like that. But my opinion, as inflation starts to rise, interest rates should then follow. High growth stocks like tech are going to then start to really fall, as investors are going to be scared that they're not going to meet their expectations. So we'll see what happens. Again, with the equity market, I really do think, like especially with the S&P 500, the NASDAQ, we should see some sort of a pullback soon. But again, that's just my humble opinion. I don't know what you guys think about what's going to happen there, but
no, I kind of agree with that. I was looking at the daily chart just today on the S&P 500 or SPY, and the last 6 days, I think 7 now, if we include today, we've been grinding past all-time highs every single day. So
Yeah,
we haven't had like a single
yeah.
red day. It's absolutely been
They're
nuts.
fat candles too. That's a
Yeah,
crazy
they're
part.
Yeah, they are.
they are fat daily candles too. And I look at
And the
futures.
market it hasn't been going up like crazy either. They're just like SPY's doing a thing of its own. You know, the S&P 500 is doing a thing of its own, and it's a little worrisome to me.
I mean, I don't know. There's no resistance ahead of us. Like,
Seriously.
maybe we have a little. I honestly think we're gonna see a summer surge where SPY sees 350. You're saying how you're not entirely sure if
450.
tech and growth is priced in with what?
Yeah, 450.
450.
450. I hope we don't see 350.
I always freaking say that. My bad. I personally believe that, like, we're at all-time highs, like Alex was saying. We're strong right now, but 7 straight daily candles, daily green fat daily candles in SPY. But I personally believe you were saying, Sam, how you're not entirely sure if we're priced in yet from the inflation fears and how growth in tech is where it's trading at right now. But I don't know. I just remember a lot of the stocks that I had on my watch list for growth in tech back from like February to the end of April, they just depreciated badly, and that's when I started cost averaging heavily. I think I threw $4,000 into the market during that, which is a lot of money for me. I'm only 21 years old, but I was very aggressive on my growth stocks, and my cost average is relatively around the same area where they are now. And I just have the belief that we're not going to see interest rates rise for another 2 years. I think 2023 is. I think Powell is very like stern on that in a couple years we'll see interest rates rise. So I personally believe that we're going to see a 450 SPY, not a 350 SPY. If that's cut out, you guys heard that. But I think we're going to see a 450 SPY by maybe the end of August before we go into September. And then I think Qs are going to continue to see all-time highs this summer. That's just my opinion. But
I agree with that, John, because I've been watching tech as everybody has very aesthetically, but it pulled back a lot. Like a lot of tech pulled back. Just take a look at Amazon pulled back. It's kind of done. If you look at their chart, they're probably the biggest one to watch. They did almost like in the past 2.5, 3 months a crab walk, as Caleb would say. You know, it's spiked up. It's made a top, made the bottom, made the top, and it's done it more than 3 times. It's made more than a triple top and triple bottom, and now it's starting to spike past that top again. I think it's just going to blow the top off. I think companies like Fastly, Snap, Pinterest, Etsy, Apple, they're all just going to do that. Tesla's going to fall right behind. Google's doing it right now. So I agree with you, John, 100%. I think it's a bull-ass market, especially for the tech stocks.
yeah, Caleb, I want you to tell us how Amazon's doing nothing right now, and tell me your thesis right now. We're going to actually do in this episode with
Thesis to bring it up. Okay. Well, I'm not going to bring it up too extensively because I don't want to take up too much of everybody's time. But basically, it boils down to the fact that regardless of how much money has been pumped into this market, is that we're still going to go up, and there's still a lot of undervalued companies in tech. And something I want to use right now, we could talk about JD. We could talk about my favorite right now, though, is one like Micron. Micron just reported the best earnings it's ever had. It actually blew out earnings. It doubled EPS in the matter of a quarter. And this is during the semi-chip shortage, may have it. Their PE is 20. They are trading low. Every price target has them at 120. They're at 80 right now. And I ran a DCF and I have them around 130. It is ridiculous because we're so high up the market right now, but there's still so many undervalued companies, particularly in tech, which is weighted very heavy in the market for SPY and QQQ. So, it's just QQQ overall, what am I saying? Anyways, at large, I think we have a long time to go before we actually crash. I think we have like a year and a half, and that crash will come, but even when it comes, what's it going to be like? It's not going to be huge. It's going to be like 25-30% tops. And there's obviously going to be like a global macro event that causes it, like something like 2017 with like the China-US tensions that caused the market to go down. I think something similar of that nature is going to cause the market to go down, but another black swan event like COVID causing like a 40% crash is not going to happen. And right now, you're just foolish not to throw money in the market and play it because we all know it's overvalued, but why not keep riding with it until it stops? That's my thesis here, is that it's not going to stop really anytime soon unless we have that macro event, which you will know about. So why not just ride with it?
either macro or like some sort of like unsystematic risk, like war tensions or something like that, like a currency war with China and the U.S., like something of that nature would have to happen for me to be like, okay, like I'm gonna chill on the equities, I'm gonna get my cash ready, I'm gonna start a cost average, but like I don't see that happening for another 2 years unless we raise interest rates, and that I think is going to be in 2023, and then some sort of macro or unsystematic risk that's just going to correlate to driving all markets down, like equities, real estate, crypto. There's got to be like something of that nature.
Also, a huge thing for me is that I was talking to John about this earlier in the week, and it's called the taper tantrum. And that's what we kind of experienced like a few weeks back. But this was originally brought up in 2013 with the initiation of quantitative easing. And the whole thing is that everyone's like, oh, the market can't keep going higher. But it can if the Fed keeps pumping money into it every time it goes down, which we literally experienced a few weeks back. So it's just a proof of stake in a sense that this market won't stop going until the Fed lets it. So until the Fed stops it, or some black swan event happens, or something massive in the macro wise, this market's going to keep going up. And it's overvalued. Everyone knows it's overvalued, but it doesn't matter. It's just going to go.
Yeah.
It's kind of crazy.
I agree with that too, especially with all the good news that's coming out regarding COVID and the jobless reports. They're starting to diminish more. More people are going back to work and everything. The economy is doing pretty good, especially in, well, I didn't think that it would as a Democratic Party as president right now, but honestly, it is going pretty good, and I agree with what Caleb was saying. That I think it'll just keep going up, especially with all the good news coming out.
The only thing that worries me, and you actually mentioned it, you said COVID, and there's good news around COVID. Yeah, there's good news in the United States around COVID. Right now, the only thing that worries me about that in the market is this new variant, and I haven't even looked into it that much just because we're in the United States and all that. This Delta variant, and if you look at the WHO and now the CDC, all the world governments are starting to push that agenda again of COVID, and I'm a little worried. I got this little devil on my shoulder telling me, hey, maybe don't be as bullish as I should be, just in case they really push this variant thing to, use it to bring down the market. So I guess that's just my little piece of warning out there. But other than that, yeah, I see everything going up.
Gosh, my whole thing is that, obviously the U.S. is doing, I want to say the best. Obviously, we're from the U.S., so it's a little biased, but the best large scale of any country in the world in terms of rolling out the vaccinations. I mean, obviously we built it here, so it makes sense. But
yeah,
if you look at countries that are lagging, Russia's index is up 30% this year. Canada is up 20. Canada's actually beating us by 5 to 10 points. If you look internationally, the European markets are up substantially in American markets YTD. And it's because they keep pumping stimulus into them. It doesn't matter. COVID doesn't matter. And I think we proved this even a few months back back in October, when we were talking about, we're going to re-lock down again because cases are spiking. That didn't affect the market. No one cares. The thing that affected the market at the time was was Biden or Trump going to get elected? That had much more sway than COVID. So the Delta variant, and especially J&J came out today, they were we're fine. Delta variant's covered for a vaccine. It's probably the same with Moderna and Pfizer.
Yeah, that's true. That is true. That's why I said there's a little devil on my shoulder telling me just to be careful. I didn't say there was a big one on my shoulder.
The little devil on my shoulder is Rothschild, who is when everyone is fully bullish, that's when the market tops, and then when there's blood in the streets, obviously buy, especially when it's your own. That's a great
Josh is bullish even when his whole portfolio is blood red. He's always bullish.
Yeah, I fucking buy more when that happens, dude. I double down, I triple down. That's when I make my most money.
That's facts.
Yeah, when you're fearful, be greedy. When you're greedy, be fearful. Or when people are greedy, be fearful. When people are fearful, be greedy. And there's honestly a lot of talk about a market crash. We were supposed to experience some sort of market crash. Everyone was saying we're going to be in a recession right before COVID happened. And then COVID happened, and that covered up the recession that we were supposed to have. So then people are saying, the coronavirus came out and that caused equities to sell off and everything, but we were supposed to have a recession before that. And then now as we're slowly coming out of the woods of COVID, people are our economy sucks, but you have to consider the fact that the stock market and the economy are two completely different things, and they're not entirely correlated. And now people are still drawing that narrative a little bit, how they think that we're going to have another market crash just because we're at all-time highs. And I would, from the people that I've seen on Twitter, just around me on everyone that I've had conversations with, the majority are more people are saying that they're fearful than greedy about being bullish in the market. So I don't know, play man in the suit. If someone's saying one way, you go the other way. Dave Portnoy said it best about that. That's how he gambles. But
Yeah. The S&P 500, and especially like most of the stock market, it's forward thinking. So usually the economy catches up to the S&P 500 later on. So what we could be seeing right now, with how reserve requirements right now are at near zero, interest rates are at near zero, and the economy is really starting to open up as we get into the summertime. The S&P 500 could be pricing that in as we speak right now, especially as we've already gotten through the bad news of inflation and all of those fears. Again, it's starting to price that in, and it's really just the major indexes or the indices like the S&P 500, the Nasdaqs, and the major companies like Apple, Amazon. Those are the ones that are really carrying the market. Smaller companies still have a ways to go. I haven't looked at the Russell 2000 recently, but I'm sure it's kind of lagging a little bit. But even right now, the price to earnings ratio of the S&P 500 is near like 50, and our average is about 15. But again, you have to take into account how our interest rates are at near zero, so the money circulation in the economy is extremely large. Hence why we are having this massive buying surge essentially. And as we are pricing in, again, the stock market is future thinking, could be seeing the market continue to rise over the summertime as we are opening up. We're completely good, all of that good stuff. I would just be a little skeptical. That's just in my opinion, because again, a crash, you don't really know a crash is happening until you're in the end of it. So
Totally agree.
you just gotta
Set your limit orders. You gotta set your limit orders. Make sure you got your stop losses and your risk managed and all that good jazz.
Absolutely.
What do you know about stop losses?
That's why I said you guys got to do that. I don't do that shit.
Yeah, I mean, like, the reason why I'm just like not worried is because I've done my cost averaging. Like, the money that I have in equities right now is, like, I'm way too exposed in my opinion, and it's in my Roth IRA, and all the companies that I'm invested in for long term, they're all my high convicted stocks. I got in at low cost averages, like I'm in the money essentially, and I just have no intention on selling them for like the next few years. Obviously, I'm going to reevaluate to see if anything fundamentally changes within the company, but I'm pretty set in stone on the investments that I have, and I'm risk managed as well. So like, I'm not putting any more money into the market right now, as we're at all-time highs, but I'm just like sitting on it and I'm ready. But as we're talking about equities and everything, all of you guys have been in the market since the coronavirus, and we experienced this March lows buying opportunity and everything. And I was just wondering, what was the biggest win that all of you guys had during that time, whether it was last year or just in general? What was the biggest like option trade or investment that you guys had in equities? And just like tell a little story about that. So there's just like something exciting for the viewers, a little story. But if you want to start, Caleb, you can.
Sure. Let me camera focus a little bit. There we go. So I've really not been trading options until I think it was like May, April last year. Before that, it was like long-term investing. I remember I did crypto for a little bit. I started 2018, so I've been in it since that. But my first $1,000 day, I think that's what we're talking about, right, was August of last year. I remember it very specifically because I was like playing basketball with my friends, and I was like in a few stocks, and they started going when I checked in like during the breaks of the games, and I was like, this is crazy. So I was in, it was a Tesla spread, like it was a Tesla call spread, right as they had that run for the 5-to-1 split. And then I was also in an Amazon spread the exact same time. And for some odd reason, I don't remember the news, there was something going on, but tech was running that day. So I closed up like $1,200, and like my portfolio was up a lot. And that's like very rare because I trade like very small positions. So it was pretty cool. Great feeling.
Nice.
Love that.
Very good.
Go
Very
ahead,
good.
Josh. You're next.
Which one would mine be? I don't know. I think. So, what was the date? It was actually this year was probably my biggest one. It was actually as I just got joined the stock CEOs. It was on Jemiah Technologies. I was looking at some options on there. I grabbed a lot of cheap options because I was just kind of looking at the charts, and I was like, you know what, tech's run a little bit. This seems like a good. I don't think it was an actual like fundamental. Hey, this is going with the market. I think Jemiah was more of a pump. We'll call it a Wall Street bets kind of scheme when I got into it. And I just lucked out, but it was like 25,000.
Wow.
Did you actually?
Yeah. Yep.
What was the percent
awesome.
return?
Yes. So contracts $30 a piece. They end up 750. Do the math.
That's unreal. That's crazy, dude.
That's
Yo,
why.
Josh, what's your nickname
yeah.
in Discord? What's your nickname in
Diamond
Discord?
Dick. Yeah, dude, I hit on a lot. I actually have a lot of those kind of stories just because the options I trade, it's either boom or bust, right? So if I'm gonna buy 10 options, 10 different tickers, 9 of them might go to $0, but that one that I hit on is gonna go for 1,200%, and it's gonna completely erase all my losses, and it's gonna give me plenty of gains. So that's kind of my trade.
I could have sworn your biggest one was when you got into AMC and then you took margin out.
Oh, yeah. So yes, that's technically my biggest one, but I wasn't able to accrue, or I wasn't able to take out the money. So when AMC started running for the second time, I used $36,000 in margin to buy, I don't know what it was at, fucking 700 freaking AMC options contracts. Well, AMC hit it right as soon as we saw volume come in on AMC in the morning. I hit it right then and there. So I got it at its bottom, like its absolute bottom. It ran for about 4 hours, 5 hours. Next thing I know, my account, and I was sharing this with these guys in the live of our Stonk CEO's Discord. I was up to about $136,000 that I had made, but because I had used all my margin, E-Trade was so awesome that they instantly froze my account and put a house call on my account. So they wanted $36,000 cash in order to free up the assets in the account. So I ended up spending about 6 hours on the phone with E-Trade and on hold, which our lovely members of our Discord got to hear me stream, yelling at some 15-year-old kid on the phone telling me to give my fucking money, right? And so at the end of the day, I literally got my account liquidated and I walked away with $76 profit.
You did.
That's
We're
what
just
I
like
was
yelling
saying.
on the phone.
Oh, I was screaming. I told the kid I was going to hunt him down. It was bad. Yeah.
That's true.
Luckily,
That's
they
why you
haven't
can't
came
buy
after you.
margin.
Yeah, don't invest on margin unless you know what you're doing.
So to talk on that, that's actually what got me out of margin, right? So I used to have the 25,000 to day trade and then the margin. I said, screw this. I actually liquidated my whole account when that happened, and I was switched over to a cash account. So now I just use a cash account to day trade. So I can't do that again, even if I wanted to.
Shoot, bro. Sorry I brought that up, but I could have sworn it was that one. That was your biggest one. Because I remember it, because it was like one of my plays, I swear, and you're like, all right, I'm getting in margin. And I was like, bro, what are you doing?
Yep.
But I'm more of like a long-term investor. When I first started, I've just been acquiring shares over the long term. So I don't like going too heavy on options. As you guys probably know, it's pretty risky, especially if you're not very good at it. I'm not like the greatest. I don't claim to be like the greatest option trader of all time. I do it every now and then. But honestly, mine is similar to Caleb's, is in when that surge happened with the stock splits with Apple and Tesla. My shares of Apple just absolutely ripped, and Microsoft as well. I know Microsoft didn't do a stock split during that time, but of course it was running as well with tech during that time, the summer of 2020?
2020, yeah.
But yeah, that was my biggest win in stocks, and in options, it was this year with AMC. But yeah, that's a long story. But there was a point when it was glitched. I made up to like $18,000, I want to say, on an AMC call, but I only spent like $120 on this one option contract. But it was a glitch. But that option contract did top out at about $4,000, in which I diamond hand the whole time, and I only made like $1,500. But it is what it is. I could have made a lot more, but I'm still in for the ride. I still have shares in AMC. I still think that it's gonna go absolutely berserk. But that was my win.
Yeah, he's certain on $100 for AMC, Sam, if you weren't aware yet.
I'm very certain on an AMC 100 over that.
We'll see. That'd be awesome if that happens. Yeah.
What's yours, Sam?
Yeah, what's yours, Sam?
Oh, my biggest win was with actually Bank of America. So what I usually like to do is long equity anticipation plays or leaps. Basically look at a stock and I'm like, oh, okay, I think it's undervalued. I'll buy a naked option call expiring in like 3 to 6 months. I did that with Bank of America trading at like $25. I thought it would get to $30. So I bought a $30 call, and mind you, the the premium was extremely cheap. So I bought in for like $30 a contract, and I bought in a good amount. And then obviously, as you can see, Bank of America got to like, I think at the time, $36. Made a lot of money. I think I made like nearly 12, 13 grand putting in like $400, $500 in profit. So I made some good money off of Bank of America. That was a big play. I noticed, again, all fundamentals, as interest rates rise, banks are going to follow. And as you can see now, the banks are still looking pretty nice. But right now, the best place. But, that was my big win in the options trading.
All right, so if you guys watched like the first episode when I was talking about AMC, that was probably my best option play. Just to summarize real quick, me and Alex, we got into both shares and calls when AMC triple bottomed in January at about $2. We alerted that in the Discord. I posted on my LinkedIn as well, and then we also had that some sort of insider information from Luis, our audio engineer, was like the confirmation of us getting to that trade. So I got into 50-cent calls for 2022 expiration, about $200 a contract, and finally got out of them. My dad's still in them hodling. He has, I think, 4 contracts left, but they're up over 4,000% right now, which is insane. But that was probably my best options play. And then for stocks, last year at the March lows, I really wanted to get into Amazon because it was at $1,900, I believe, was where I was looking at it. I think it got as low as $1,600. But then I was telling my dad about how I think it's a good opportunity for Amazon. And he was like, well, Amazon, well, look at Facebook, look at Microsoft, look at all these other big techs, all these FANG stocks are just so low right now. And my dad, I think he dabbled a little bit into the FANG stocks. And I just wanted all of them. And I was doing some research and I came along leveraged ETFs for the FANG stocks. It's called FNGU, and it's a 3x leverage ETF for all FANG stocks. I think Baidu's in there as well, JD, a lot of these other big tech companies. And it was literally down like 75% from where it was at before COVID happened. I think the price was around $50 a share. So I got into 20 of those, and it 3x. So let's just say Amazon goes up 5%, or the entire FANG ETF goes up 3% that day. This ETF will go up 9% or 10%, whatever the premium after the premium and the expense rate and all that. So I got in at $50. I told my buddy about it. It's very similar to TQQQ, which is a 3x leverage ETF of the Qs, but this just has more exposure to the FANG stocks. And FNGU literally ran from $50 to about $275 within 4 months. And that's just holding shares. You can also buy options for it as well, but I didn't even look at the option chain because I would never be a degenerate and do a leverage ETF option trade. But yeah, so I got out of it at around $175. So I 2-3x that, whatever the math is, probably 4.5x. So it was about a $5,000 trade. But that was probably my best trade. And I honestly wish I was still holding FNGU because when I got into it, FANG was at the bottom. Like Microsoft was at $150, Facebook was under $200, Apple was at I think $270 at the time because it ran to $500 before they split. It was just a great opportunity, and I was always told to never hold an ETF like that, a leveraged ETF, for no more than a month long, but it was a completely different time in the market because we saw the recession of 30% back, but that was my best investment for stocks.
Nice.
Sorry for that novel.
Love it. No, it's good.
But yeah, so I think that's a good episode, guys. It was a lot longer than anticipated. If you guys made it to the end, thank you. We appreciate that. We're really trying to scale and grow this YouTube channel. We're going to do an episode every single Sunday until we die. So this is just episode 3 of many. I mean, yeah, like, I don't know, like the difference between YouTube and all these other social media outlets is that YouTube is a search engine, and you can have your TikTok, your Instagram, your Twitter, but like that's not a search engine. You post and then it goes away. So we really want to try to log these podcasts every week, so they're here to stay. And if we ever have a video that blows up one day, then all of these videos are going to blow up. And if you guys check the description, our friend Sam, his Value Fin is going to be in there. All our TikToks are on the screen for you guys. But if you guys like the channel, hammer the like button, subscribe, comment any questions too, because we really want to start doing that panel where if you guys have any questions from the video, you can ask them below, and then we'll do a little round robin on them. Still haven't seen a question about that yet, but they'll eventually come. But if you guys have any last thoughts, or Sam, hope you enjoyed this episode, but it was a good one.
Yeah, man.
Yeah, it was.
Great.
We
Thank you.
appreciate you, Sam, for coming on with us.
Thanks for having me, guys. I'm excited for what you guys are gonna do moving forward.
Yeah.
Absolutely.
We're excited for you as well. What you want to do is honestly really dope. Like, you want to have a trading platform as well with your company and providing financial literacy for people in the crypto space, and I'm sure equities as well. It's a very nice opportunity, and you can see great growth these next couple of years as all these retail guys are continuing to gain interest into investing and building wealth of some sort. So I think you should capitalize on that, and you will.
I appreciate it, man. Thank you, and likewise, guys.
All right. We'll cut it here. We'll see you guys on the next episode, all right?
See you guys.
See ya.
Bye. Thank you. Bye-bye.